Folks, you better strap in and get ready for an exhilarating ride because today we're uncovering the top 5 penny stocks set to skyrocket in June 2024. Each of these picks has a potent catalyst, a prime setup, insider buying, and or another compelling reason why they're hot buys right now. And you are in for quite the treat because we have several stocks with crucial FDA approval decisions imminent. You do not want to miss out on these potential game changers, so go ahead and grab your pen and paper, folks, and we're going to get right to work. Timestamps down below. And as always, of course, make sure to do your own due diligence on all ideas presented here on the channel. If you're the one taking the risk, you got to be the one doing the ultimate frisk. Lots of people, they get real frisky without thinking about their risky. Okay, let's start with number 5, Lucy, L-U-C-Y. Now, Lucy has several big opportunities coming up, and I'll explain. Lucy is Innovative Eyewear Inc., and it's a company that specializes in the development and sale of smart eyeglasses and sunglasses. But the reason that we like her is because she has a very particular squeeze setup ripe with ongoing PR catalysts. For context on this, we briefed on the lovely Lucy at roughly 24 cents a share last Friday morning, and it proceeded to run to $1.14 at highs towards close, which was about a 373% briefing price to highs run, which, by the way, cough cough, ZipTrader Use Memorial 50-day sale is still on if you want to get 50% off and get access to our daily morning briefings with all of the catalysts as well as our step-by-step video lessons. But anywho, after that massive run, she sold off super aggressively and had yet another spike upward today, going another 158% plus by the time of shooting this video. But why did she do this? Well, she released a euphoria-garnering PR piece. Quote, Innovative Eyewear Inc. launches Eddie Bauer smart eyewear with ChatGPT. Now, folks, you have to understand that the way that small cap markets work is small companies know that they can drive interest into their stock by putting out press releases talking about hot ticket items. That's why companies will oftentimes highlight their exposure to ChatGPT or AI or crypto or NFTs or whatever is hot in whatever market you're analyzing them in. And the deal with Lucy is that history shows that she is very, very heavily prone to frequent and aggressive catalyst runs, which means that there's a huge incentive for Lucy's team to keep putting out these press releases every time she sells off. If the company wants the stock price to go up, well, it's very, very easy for them to just go ahead and put out a press release saying something about ChatGPT or focusing on some partnership from a year ago, and all of a sudden the stock goes up massively. Now, of course, obviously runs like these and runs on these types of catalyst runs are excellent for traders, but are a complete disaster for folks that want to buy, hold, and get married. So if you're somebody that wants to trade, Lucy is a great opportunity once you get the next massive dip. If you're somebody that wants to buy and hold, I would avoid Lucy like the plague. Penny stocks are great because of their runs, but oftentimes they make very, very bad partners if you're going to get married. Okay, number 4, ticker symbol GERN. For Geron Corporation. Now, GERN is a late-stage clinical biopharmaceutical company, and the reason that it made it to today's list is because it has a PDUFA action date, aka FDA approval decision date, on June 16th, 2024. This is for a key drug in their pipeline. Now remember, companies need FDA approval before they can get to the market, and that is the final stage to complete marketing and commercialization. The FDA had a committee vote back in March, and the committee gave it panel approval, and the price doubled. And so if we get this final FDA approval this June on the 16th, it's likely we see an even bigger move. And more so, the anticipation up to the catalyst can be quite lucrative itself. Now, obviously, anticipatory runs themselves are a thing, regardless of whether or not we get an approval. But in terms of the odds that we get an approval, well, you never know for certain, but at the March meeting, quote, advisors to the US FDA backed benefits of Geron's blood disorder drug, saying it outweighed the risks associated with the treatment based on data from a late-stage trial. The panel, by a wide 12-2 margin, voted in favor of the benefits of the injectable drug called imetelstat, stating the associated risks and toxicities of the treatment appear to be manageable. But Charlie, how far can this catalyst drive the stock? Well, if you look at the stock right now, it had its original massive catalyst run in March and then peaked out at $4.30. It's since been selling off. My next expectation is that it bottoms out and starts anticipating and really filling in for a run heading into the FDA decision on June 16th. Then if they get the approval, you get an initial pop and then a sell on the news, and then the stock adjusts to the approval and finds itself at a near fair value. That takes into consideration the value that the company will realize while bringing this drug to full commercialization. So what price is that at? Well, analysts put the price target of the stock at an average of $6.08 according to Tip Ranks. That suggests an 87% of upside to the average. The highest price target is at $10 and the lowest is at $4.50. 6 of the analysts rated it as a buy, 1 as a hold, and 0 as a sell. In terms of my thoughts, I can see GURN peaking at well over that analyst average price target if it ends up getting the approval next month. Will it retain at those levels? Well, that's unlikely, but it should provide a very, very ample trading opportunity. My guess is you get somewhere maybe around $7 or $8, and then all of a sudden you get a big dumpito, and it settles maybe around $5 or $6. Okay, number 3, GenFit, ticker symbol GNFT. Now, GNFT is another FDA approval play, and it is getting some recognition right now. Now, I'm not a fan of chasing, so I'd argue you want to wait for a few day dip before considering buying, but nonetheless, bigger picture, the FDA approval decision on this bad boy is coming June 10th. This is for their elafibranor drug. And this approval will lead to the drug coming to market and help fund the rest of the company's pipeline, which provides rolling future catalysts as well. From the CEO, quote, approval and commercialization of elafibranor would mean that we would receive additional milestones and a regular stream of royalty payments. That's the key part right there. Royalty payments, which will then be used to finance our pipeline, now mainly focused on acute on chronic liver failure. The company is also well managed and well capitalized. According to Dilution Tracker, they have about 86.7 months of cash left, which is excellent for a company in a money-burning field, right? This is in the infamously expensive drug development and FDA trial field. Very, very expensive process. So to have 86.7 months of cash left, that's a huge, huge win. In terms of price target, analysts are putting this at an average of $9.50, which is almost 88% of upside from current trading prices. And at the same time, this company is seeing attention from hedge funds. From defenseworld.net, a hedge fund recently raised its stake in GenFit stock. Optivir Holding BV lifted its position in GenFit SA by 2,229.2% in the fourth quarter, according to the company in its most recent 13F filings with the SEC. Now, why were they buying this so aggressively? Well, clearly they see opportunity with this drug in its pipeline for approval. But going back to the chart, I think the way to play this is not when it's going parabolic, but rather on a solid dip, at least getting a solid dip. We are greedy traders. We don't want to overpay for things. A 20 to 30% dip opportunity will likely come within the next few trading sessions, and then all of a sudden you could start playing it for the next rally to new all-time highs. Okay, number 2, Pineapple Energy Inc., PEGI. This is one of the lowest priced stocks on this list and perhaps one of the most extreme potential plays. Little old Peggy has been on an overall pump and dump uptrend from 5 cents, and there's reason to believe she's just getting started. What is Peggy, though? Who is Peggy, though? It is an emerging company in the renewable energy sector specializing in residential solar energy solutions. This company, although relatively new, presents a compelling trading opportunity for several reasons, including its market potential, strategic positioning, and the current undervaluation, I'd argue, of the stock. Of course, this operates in a sector that's rapidly growing, renewable energy, and that's expected to expand significantly over the coming years due to massive government investment. The company's business model centers around providing comprehensive solar energy systems for homeowners, which includes solar panels, battery storage, and energy management solutions, which, if they aren't already very heavily subsidized in most markets, will continue to be more and more heavily subsidized. But all this mumbo jumbo aside, look, we could talk about green energy, we could talk about the future and all that kind of junk, but at the end of the day, what I'm interested in is whether or not this is a stock that has a good enough story behind it and a low enough valuation that could bring a wave of traders and speculators into it to fill in the gap between the undervaluation and the fair value. And in my opinion, I think the argument is yes. In fact, I think that greedy traders specifically can capitalize on Peggy quite a bit. This stock is trading at a significant discount compared to what I believe is its intrinsic value, which provides a very nice arbitrage opportunity for swifty and very greedy traders. Just to be quite frank with you, I mean, the undervaluation is largely just due to the market's general skepticism towards small cap companies and emerging companies. However, I think that Peggy is one of the stocks on this list that is quite appealing because of that, because people are dissing it right now, and because over the medium term, you should start seeing all of a sudden Peggy report that, hey, wait a second, we're actually not a garbage company. Another factor that makes Peggy quite appealing is its potential for rapid price spikes. Any kind of positive news like a strong earnings report, a new partnership, or any kind of regulatory development can cause the stock to go up quite a lot and has in the past. Moreover, Peggy has demonstrated surprisingly strong financial performance and growth prospects for being such a small, distant company. The company has consistently reported increasing revenues and expanding profit margins, indicating effective cost management and overall operational efficiency. So anyways, I would argue that Peggy, while being one of the more speculative on this list and definitely the cheapest price per share, well, I'd argue that it is ripe. It is absolutely ripe to see more surges coming in the future and is an excellent trading opportunity. Okay, number 1, XPeng, ticker symbol XPEV. XPEV is one of my favorite penny stocks on the list best right now in terms of a value dip buy, something that you can actually buy and hold in my view. XPeng Inc. XPEV is a leading Chinese electric vehicle manufacturer known for its innovative and smart EVs. The company designs, develops, and manufactures a range of high-performance EVs, integrating advanced software and hardware technologies to enhance driving experience and safety. XPeng is focused on producing intelligent vehicles that leverage autonomous driving technology and smart connectivity features. Now, why do I like the stock though, Charlie to? Well, the stock is trading at multi-year lows despite its fundamentals consistently improving. For example, you go over and you look at XPeng's financial performance. It's had significant revenue growth. In Q4 2023, the company reported a revenue of $1.84 billion, which marked a 153.9% year-over-year increase. The vehicle sales revenue surged by 162.3%, and XPeng is aggressively expanding its market reach, particularly in Europa. This is a big reason why people should be focused on the stock, because the company is really making an effort to expand in Europe, and it's working. The company has extended its presence to several European countries, including Germany, Deutschland, France, and the UK. This expansion, folks, will be pivotal in capturing a larger share of the global EV market and driving future growth. XPeng has also formed strategic alliances to bolster its technological and market position. Notably, its partnership with Volkswagen, the wagon of the Volks, aims to co-develop vehicles, enhancing XPeng's credibility and technological capabilities in the competitive EV market. Such collaborations are absolutely crucial for technological advancement and market penetration. Now, in terms of deliveries, XPeng has consistently increased its vehicle deliveries. When you're looking at the overall bigger picture, in Q4 2023, the company delivered 60,158 vehicles, a significant 170.9% year-over-year increase. And that is pretty good proof of concept if you're asking me. Now, in terms of margins, XPeng is working on improving its gross profit margins through better product mix and cost control measures. Despite a pricing crunch right now, which is largely driven by all the manufacturers, including Tesla, while still the company has managed to continue to have healthy profit margins and continue to make investments to increase them even further. Now, one of the reasons why I like XPeng, especially in the Chinese market and in the European market, is because of its affordability. It just makes it a lot more accessible when the car is affordable. And the company plans to launch a new affordable EV brand with prices ranging from $14,000 to $21,000, and this strategy will capture a broader customer base and drive mass market adoption of smart EVs, and XPeng will bring in the bucks from that. In conclusion, XPeng XPEV presents a promising trading opportunity due to its strong financial performance, technological innovation, stretch into the European market, and its market share in China. And the company's focus on affordability and accessibility will, in my opinion, help drive the stock higher. I'm not going to say that this stock is going to be at all-time highs anytime soon, but what I will say is that it doesn't deserve to keep going to newer and lower low. So I would say, for sure, take a look at this one, do your due diligence on this one with today's prices while we're at today's prices. Anyways, that caps off today's video. Make sure to let us know your favorite ones down below. Make sure to take advantage of that Memorial 50 coupon code on ZipTrader U and ZipTrader options, and we'll see you in the next video.